The European Commission has said that it was putting forward a new list of U.S. goods worth $84 billion that could be targeted by EU levies if tariff talks with Washington fail. The bloc's Trade Chief Commissioner Maros Sefcovic announced the proposal, accounting for some 72 billion euros worth of U.S. imports at a meeting with EU ministers in Brussels. This move comes after U.S. President Donald Trump threw months of painstaking negotiations with the EU into disarray by threatening to impose tariffs of 30% on the bloc's goods if there is no deal by August 1st. The EU trade ministers agreed that they were still keen to secure an agreement with Washington before that deadline to head off the damaging duties. EU trade ministers agreed that they were still keen to secure an agreement with Washington before that deadline to head off the damaging duties. The EU has already prepared a separate list of U.S. imports worth 21 billion euros that it is ready to target over earlier tariffs from Trump on steel and aluminium. However, the bloc has announced that it would further hold off putting that list into force as it searches for a deal with the United States by August. Now we are joined by Peter Cordillo. He's a chief market economist at Spartan Capital Securities, joining us live from New York. Thank you, Peter, for joining us today. Good to see you. Given the EU's threat to impose levies on $84 billion worth of U.S. goods, how do you expect this escalating trade tension to impact global markets, particularly equity commodity sectors?
Well, I think if I heard the answer correctly, I think that the Fed stays pat until September, until they get a clearer picture in terms of the final decisions on tariffs and what may not be the impact of the inflationary aspect of this trade war. So I think in terms of the markets, I think they stay pretty much stable. In terms of commodity, of course, we'll continue to see volatility. But in terms of equities, I think the earnings season is going to be supportive. It'll be some sort of a cushion for the trade versus the tariffs. When I say that, I mean that we'll probably get respectable quarterly results that will most likely justify the high valuations.
And Peter, from an investor's standpoint, how should markets interpret the EU's decision to delay enforcing existing tariffs? Does it signal confidence in the resolution?
Well, I think investors in the market in general right now are not really taking to heart the letters that went out to various nations regarding what their tariffs will be on August the 1st. I think the market is basically saying these are just negotiating points and they're not going to be as steep as the administration would like them to be. And at the end, I think there'll still be inflationary worries about it. And somehow or another, we'll get a little bit more higher inflation, but I don't think that it'll be inflation that's going to cause the Fed to stay on hold for the remainder of the year. So I kind of think that the markets are acting accordingly and are looking forward at this time.
And according to you, is the European Union's proposed 84 billion retaliatory tariff list a strategic bargaining tool or a step towards trade war, according to you?
Yeah, well, look, I think I've said this before on your program, that tariffs, nobody wins in a tariff war. And I think everyone realizes that. And I think President Trump realizes that. So, yeah, it could go on for a little bit more, but at the end, I think things will smooth out somewhere, some way or another. It would be very detrimental if this trade war would continue for a long time. Not only would you have in inflation an inflationary impact, but you would certainly have negative economic activity, which means that the global economy would probably be in a recession. So I think that hopefully by the fall, this trade war will be, I don't want to say totally behind us, but certainly not as vivid and present as it is now.
And Peter, now looking at a 30% tariffs threat from Trump, President Trump, how realistic is a last-minute deal between Brussels and Washington?
Could you repeat that, please?
So how realistic is it that the EU and US can reach a trade deal between the upcoming August 1st deadline? Could you hear me? Let me repeat it. So I asked, how realistic is a last-minute trade deal between EU and Washington?
Well, I think it'll happen. Certainly, the letter indicated that it's going to be 30% on the EU and Mexico. I don't think it's going to get to that. I wouldn't be a bit surprised to see it close to maybe 5 or 6%, which probably can be doable in terms of an agreement.
Thank you very much, Peter Cordillo, for joining us and sharing your insight as Chief Market